Okay, welcome. It's our fourth session here of the four-part series that we've done. It's great to have everybody here with us. I'm sure we'll have some more people jumping on here. I'm Ephraim. I'm the founder and CEO of Day Trade Like a Pro. I run our Market Accelerated Planning, or MAP, service also. You can blame me for the results in the live trade signals. And I'm excited for us to be here today for what the time that we'll get to spend together. We'll have about an hour here. And John has been a friend of mine. We were just laughing before we came on the call here with everybody about John's been doing CrossFit since back before it was cool, and then while it was cool, and then still does it today, even after it's cool. And I remember we were laughing about the first time I went to CrossFit with him. It was Saturday morning. And I think I got like halfway through the workout, and then I was like sitting over on the side. I hadn't worked out in like years, and I'm like sitting over on the side of the gym, ready to pass out. I thought I was going to die. So I've known John for many years, sort of through his evolution as a trader. And John's in an interesting situation because when he came here, it was because I reached out to him, and just the timing worked out. I think it was just it was the right place and the right time. And I thought there was probably no chance that he was going to say, yeah, I'd love to come be a part of what you're doing. Just because I knew that he didn't need to say yes to it. I knew that he was successful as a trader already. And I reached out to him, and he said, it's kind of just the right timing. And I think it just kind of all felt right. And if you've been in the ES Trader Talk, you see that he is a hell of a good trader. The mornings that he's giving scenarios and giving us prices and different things to look at in the market, he's phenomenal. I think he's for sure in the top, very, very top of consistent traders that we have at Day Trade Like a Pro. And I'd say he's in the top percentage of consistent traders in the world. So it's really a treat to get to listen to him today. And for me, this was something I was like, there's absolutely no way I was going to miss this. So my invitation to you, since you didn't come here to listen to me, I'm going to wrap it up. But my invitation to you is to really turn off any distractions you have, put your phone aside, and just really pay attention. And there's if you're committed, that the way that you listen to the training today is that you're committed to getting something that would make a profound difference in the way that you approach your trading, I'm confident that you'll get that. But if you sort of passively listened while you were doing something else, then it's likely you'll wrap it up and go, well, what was the whole point of that? Or maybe you'll get something, maybe you won't, I don't really know. But the one thing that you have control over is how you listen to what's being said. And so my invitation is really put all your distractions aside, be here, be present, and listen with a real intention and a commitment to getting something that will make a difference in your trading, because I'm sure you didn't come here to be entertained. So with that, John, thank you so much for saying yes, for being here today, for agreeing to lead the training here today. Just really, for me, I just am absolutely excited to have you here. So thank you for that. And the time is all yours.
All right. Thank you. Very kind words from Ephraim. Like you said, we've known each other for quite a while in our investing venture. So let's jump right into it. As you have any questions, feel free to type those in, and I'll take some time to answer those as we go. So don't feel like you have to wait till the end. Obviously, disclaimer time, this presentation is for educational purposes only, and the opinions expressed are those of the presenter only. All traders presented should be considered hypothetical and should not be expected to be replicated in a live trading account. Testimonials may not be representative of the experience of other clients or customers and is not a guarantee of future performance or success. No guarantees are made by Day Trade Like a Pro, LLC, its officers, or affiliates. Give you a minute to read a disclaimer that you've probably seen many times before. All right. So this is about simplifying your trading. There's a lot that comes into trading. As you guys venture into trading, I've been there. A lot of information coming at you. How do you decipher what is what? What's stronger than the other? Where do you trust? What information is solid information versus what's just out there as hearsay? So we want to learn a simple method to understand market direction and to learn to trust your trades that you're taking for more profit. So again, introduce you to a proven method of identifying market direction, providing price targets that have shown approximately 80% accuracy, very unheard of. Understand where the market will change direction, if it's going to change direction, and then show you a method to maximize your trades so you can spend less time in front of your computer. And then we'll look at some past examples, specifically on the ES. Now this does work on the NQ, gold, GC, as well as the oil markets, but there are some nuances that you want to look out for. And so there are some minor changes that you want to pay attention to. Just understand I'm looking at the ES today. So some questions you want to ask, or I should ask, is what if I can show you how to average as little as one more point than you're already averaging right now on the ES? What if I can show you ideal spots to get out of trades so that you can maximize profits? And could you control your emotions if you knew with high probability where the market is going? And then something that I did a lot, do you second guess what the market is telling you? Okay, that's an old picture, but that's me, John Wynn, born and raised Salt Lake City, Utah. I'm a sports and fitness enthusiast. Like Ephraim said, I've been doing CrossFit for a while. If you want to talk football, I'm all ears. Started in my investing journey with Morgan Stanley. Those of you old enough to know, it started out as, or it was Morgan Stanley Dean Witter at the time when I joined in '99, and started my venture into E-minis in 2007. So why was this system developed? First of all, I am not a technical person. I hate getting into the weeds, especially early on when you're trying to decipher what acronyms mean what and what people are trying to tell you the market is going to do. Even with Ephraim's map, it's a great service once you understand how to read it. But early on, I had difficulty understanding that. And so through my venture, I realized the markets do the same thing over and over again. Institutions, otherwise known as big money or smart money, they do the same thing over and over again. So it was a matter of trying to figure out a way to successfully play with the big boys and not get taken out, or taken out is probably not the right word, but be successful in the long term. So understand, when I started this, I was early 30s, had another job, trying to figure out if trading was going to be for me. So my goal was set out to, I need to figure out a system where I can be profitable in trading for about 30 to 60 minutes a day, because I got to go work for the man until I figure this out. So over the years, you'll see that this whole system is designed for you to get in, get out, and it doesn't mean that you can't trade all day, but if you can get your 5, 10 points of whatever your goal is within that 30 to 60 minutes, why would you want to stick around? It's time to go pick up the sticks and learn how to golf, which is one of the things that I did and I'm still horrible at, but that's a different story. So Common mistakes that I made throughout my trading career, probably very common for most of you, is not trusting my edge. I would literally get up, spend hours dissecting the market, getting into the weeds, which I hated to do. And then once the market opened up, I would then second guess myself, do something against my plan. My plan would be, hey, I'm going to buy and look for longs today because that's my bias. And then at some point in my trading hour, I would do a sell. Like, what am I doing? And I noticed that that was a common trait for me that I needed to get rid of. So, big reason why we developed this system. Another area, or the complete opposite, would be selling my winners too soon. And as most of you probably already know, managing your winning positions is very challenging. And it was very common for me to get out too early because even though I understood where the market was going, I still didn't fully trust it, and I missed out on a lot more bigger profits. And then, of course, indicators, analysis paralysis. We've all heard it before. You get into the game, you want to add indicators, kind of what I talked about before. Which ones are better? Which ones work better than the others? And when you have that many, it just overcomplicates things. So simplify it, find one that works. And then once you understand that, you can actually apply my system to help understand your market bias. So the market's what counts. It's what every indicator's ever been built off of, is off of price action. So understand that market itself is first and foremost. All right, let's get to really why you're here, right? How it works. Each morning, identify 3 price levels. And they're going to give you a cue on which direction the market will go. So I typically identify them on my screen with an orange line, and that's my bull bear zone or my bull bear line, okay? Then I'm going to identify a green line, which is going to be my high probability target. And it's also an area that I'm going to take some profit if I choose to hold on for more. And then our red line is my target of the day, or the morning, I should say. And that's where you should take the majority of your contract size off the table if you haven't already, or look to completely exit the trade. So I provide them for a bullish move, and I also provide them for a bearish move. Now, the probabilities where they rely is where the market opens. And some of you who are following us on Discord have noticed that I'll mention that. So here's kind of the stats. Again, I ventured into market trading the ES 2007, designed this in 2010. There were a lot of ups and downs, trying to understand what it all, to make it all of it to make sense, right? So, but here's what I found. I'm a stats guy. If you have the stats, then there's not a whole lot to argue about. So since 2010, my green lines have been hitting at over 90%. My red lines, or my targets, have been hitting at approximately 80%. I say approximately because obviously it fluctuates up and down a little bit, but a consistent 80%. And then once we hit that target, there is a reversal off a target 70% of the time. That's since 2010. That's over 10 years of data. Now, just to kind of give you some context for the short term, this is March. In March, my target, my red lines, they were hit 22 out of 23 days at 90% clip. Now, that's higher than the 80%. The reversal came off of that 19 out of 23 days, or 82% of the time, we saw a reversal off of that target. So far in April, we're not quite as strong. Target hit at 71%, or 10 out of 14 days thus far. And then a reversal has happened 12 out of 14. Now, if you're good at math, you're looking at that and saying, hold on, if targets only hit at 10 out of 14 days, how can we have a reversal 14 days? So if you notice this asterisk here, target, I have a bullish target and a bearish target. If we fail to hit our initial target, which today was a downside initial target, for those of you who are in there, it was very clear that if we broke 26, then the direction changed and we were now looking for our upside target. And so that's not in these stats that you see here. So target is actually hit in the month of March, all 23 days, but it was the opposite target. So not to confuse you, but I wanted to give you some context around the reversal. So when we reversed and we actually hit the other target, there was still a reversal to come. Now, when I say targets hit, it's coming within 1 point. If I'm in within 1 point, that is considered hit. So understand that as we move forward. Here's an example of what it looks like. So this is April 13th of this year, this month, and this blue line represents where the market opened up at. So 7:30 on my particular chart, my time zone. This is my orange line, and we opened above that. So opening above that confirms a bullish move. We're looking for a bullish move. We have a 90% chance based on stats that we're going to hit this price level here marked in green, and then an 80% chance that we're going to hit this target here. So you can see the market opens, we get a little bit of a pullback, we easily stay above this orange line, no question in which direction we're going. And so you take a look here, you can see how we're getting some resistance here just off of that 27.5 area. So there's a lot of reason for someone to second guess, hey, John said we're going to see 36 based on this target here, but we're holding here. So maybe he's wrong. Maybe this is as high as we're going to get. Believe me, I did the exact same thing. But you can see that it comes within a point several times, finally hits. Not only does it hit, but when it breaks through, it then treats it as support and then continues its move to our target. Now, let's talk a little bit about this target. It's an algorithm that I've used to try to figure this out. There was a lot of playing with where this should be. And as you can see, price actually breaks up above it by, what is that, almost 4 points. And so you need to understand that the reason why it is where it is because I want you to know that there's an 80% chance that we're going to hit that level. So let me ask you, if you got in, and it doesn't really matter where you got in, but would you trust it to get to that level? That's the key, and to be able to take profit at that 36 level. Can we get higher? Yes, that happens quite frequently. Now, when I talk about a pullback is here. So even though we broke above, you can even see that it holds for a little bit higher high, but a pullback is going to happen. So not to go into too much detail here, but when you're into a long trade, your exit is 36. You might be able to snag a few more points out of there, but the reality is the market's going to come back. So one way you could trade this is to bring your trailing stop up to that 36 area, and as it gets higher, look for an exit or maybe hold for higher highs, but knowing that there's a high probability we're going to come back down, and you'll probably exit at 36 or somewhere close to that area anyway. But it gives you an opportunity to potentially look for more. But see that pullback? It's very common to see that. So those of you guys that follow, I've made comments that say, okay, our target's hit, be careful, we're going to see a pullback. 70% chance we're going to see a pullback. Questions so far? Pretty black and white. Not seeing anything, so I'm going to
Yeah, no
continue.
questions here. John, I would just say when you're talking about the open, you're talking about the open of the US session.
That's
And you're in
correct.
Utah, so it's 7:30 a.m. your time.
That's correct.
Yep.
Thank you for clarifying. Yeah, understand we have people all over the world, so my apologies, but 7:30 Mountain Standard Time, the US Open. All right, so here's one that we're in a downside bias. Here's my orange line. We open up here where the arrow is. Once again, we get a pullback or a pull up toward our orange line. You can see that we clearly stay below that. Therefore, we're going to hit our 44 area, which we hit. A little bit of a pullback again. This again can cause some concern for some people to say, okay, I don't think we're going to see this 30 area. That's a pretty strong bounce off of that 44, but sure enough, we get through it. Not only do we get through it, it then uses that green line as a resistance level to catapult us to target. And then of course, target is hit, a little bit of a push through for roughly 3 to 4 more points. And sure enough, look at this reversal. Look what time we hit it at, a roughly 8:20 or roughly an hour after the market is open. I've achieved my target, I'm done. Okay, so just going to go through a couple more examples. In the month of March, here's our open. Not much of a pullback, but we're bullish based on opening above our orange line. Bust right through our green line. A little bit of pullback here before we hit our target. Sure enough, we probe the target, and sure enough, there's a reversal. And this reversal comes all the way back, test the orange line again. Nice little bounce here for roughly 5 points before it breaks through the other side. And now we've then flipped sides to the sell side. And I mentioned that target is hit. Well, target is hit here, but now we're looking at an opportunity for our downside target to get hit. And typically that happens when we hit one target and if we do break through, it does take time to break the other side. The question is, do you have the ability to stick around and wait for it to see it come to fruition? But if not, there's still plenty of points to be taken here. As you can see, 95 down to 80, there's 5 points. What is your individual goal? Here's one. Here's the day that we actually don't hit, 1.25. So market opens, oh, I didn't mark this one, but this one, there actually wasn't a entry to the upside because it hit before market open. So opening candle is actually right here, right underneath the 2 of the 1.25 for those who may not be able to see my cursor, that little green candle there. So we've already achieved it, it's done. So there's actually no entry to the upside. We can now use these levels for support and resistance to go up and down. As you can see, we come down. It does probe it through here for a little bit. We can see previously that we were below up here. So without going into too much detail, but we then launch back up for a nice 20-point move. Come back down, deja vu, holds again, there's a 10-point move. So this was a pretty extravagant day, a lot of movement in before the US Open, but we came and it already achieved. So that scenario you'll see happen. Not too often, but there's an example for you.
Hey, John, one question that's come in that I think, well, a couple that I think are relevant. One is, how do you think about entering a trade when the market's opening and you're entering before the market, after the market? What's your criteria for that? And another question, and a valid question, is, there's some skepticism about, selectively pulling examples here. And, I know you have about 20 different slides here, and a lot of them actually go in order. So I think it'd be important to address both of those.
Sure, yep. So I'll address the second one. If you notice the dates on these, this is just day after day. I'm not selectively pulling one. I literally just pulled every day in the month of March just to kind of show you. I actually have some in April as well, just to pull the last 40 days, or not 40 days, but roughly 30 trading days. So it's not selective. I mean, I can understand that anyone could say, look, you just type that in, I can't see what day it is. I get it. But that's just, if you want to screenshot this and go back to that particular day to confirm, I'm okay with that. As far as how to enter in the market, I'll get to that a little bit later.
Great.
But
John,
also,
can I just add something to what you said as well, which is that, so some of you, if you have done the prediction point trial and you've been in the Discord channel, and I know that some of you in here have been, and you've been paying attention to John, his handle in Discord is Cuba Trader, or maybe just Cuba now. But I mean, this is not something new. This is what he's been doing every day, and most of those days he's posting in the Discord channel, and ahead of time before it's happening. So if you haven't been able to see that and follow along with that, then you do have a bit of a disadvantage with that. But for anybody that's in the Discord channel, you've seen him do this day in and day out. And it's okay. We invite you to be skeptical. That's there's nothing wrong with that at all.
great point, Ephraim. Again, I'm not here to try to convince you. I expect you to be skeptical along my journey. The exact same thing. It was, how do I decipher who's right, who's wrong? I'm just trying to show you a tool that can potentially improve where you're at in your trading journey right now. One of the hardest things to do is understanding bias, direction. When you're looking at price action, there are days when, my bias is different from somebody else's. When we first started, I actually would get on a call with Ephraim a few times. This was way back in 2008. And he would tell me his bias, and my bias would be opposite of his. So who's right? Do I trust myself? Do I trust him? He knows what he's doing, right? And so this system was set up to where my emotion is out of it. If I can eliminate emotion, then I'm already a step ahead of the game. So very simply, it's, okay, here's where we're going. Now the question is, how do I get in? And someone asked that question, right? So if you have a system that you are already using, and you can see that we have a target that's up ahead by 10 points, and maybe you only typically snag 2 to 3 points on the regular, what would it do if you see this time and time again? If I give you those price points and you're able to hold on for 1 more point, 2 more points, what would that do for you in your week or month of trading? So there are times when I don't like the trade setups that I'm getting, and I won't take it. But based on the statistics, I can sit here and say, well, I missed this buy down here at 20, but here's where it's going. Is that the question is the bus going to stop and let me on, or am I going to be passively watching this happen, right? There are days like that. So just another example of where, another one where we didn't quite hit the target, came back down, and then there is an entry here. There's a cycle that I use to identify how to enter the market, and it's just a matter of whether it gets me filled. or whether there's too much risk for me to take the risk. So that's something that I will go over with you, individuals who want to take the next step.
Hey, John, another quick question. When the red targets are hit, is there a directional bias change, or how does that factor, given the reversal up there? How do you look at that?
Yep, great question. So when we hit the red targets, there is a 70% reversal. Now, that reversal doesn't mean it's permanent. As you guys know, it's a correction, but it's one of the tools that you can use to then look for a trade to go in the opposite direction. There are times when that trade goes for several points. I've shown you a couple examples like that, and there's ones like the one you're looking at right now where it goes higher. There is some patience that's required in that when we approach that level. There's also different tools that we can add, such as prediction points, to kind of give you a better indication of what it's going to do. In fact, one of the reasons why I agreed to join Day Trade Like a Pro was from sharing the prediction points and then understanding that my system would help enhance that system as well. So that's something that I definitely explain in detail to understand what happens. To answer the question in a nutshell, once that's approached, there's a wait and see scenario that has to play out. So there is some patience that's required and discipline where you don't start emptying your bullets to try to take trades, because we have to wait to see what happens. And I will say that typically what will happen is this scenario where there's a small pullback, not a big one. Here's a small pullback, then it breaks through. That breakthrough can be 2 points, it can be 8 points, it doesn't really matter. But there's going to be a high probability that's going to come back down and test this level, as you're probably familiar with that type of trade, for a continuation. Very simply, it's a low risk trade, because if we break below, then chances are that's the beginning sequence of a reversal. But it's either A, it pops up and holds, and then we're going higher, like this scenario here, or it breaks below and that area also holds for a reversal. The key is understanding where that's going to take place. You can see in this example, this scenario right here, and also the reversal where it comes down and tests the bottom side of that red line for a push down, happens quite frequently. It's just a matter of how and when do I enter? When do I wait for it? Do I get in? Is it breaking? Well, it could break, and I'm not saying it won't break, but there's a 70% chance that we're going to get some sort of pullback. So how quickly are you going to get in on that buy? Again, there's some details in that for those of you who want to take the next step, we can talk about. Okay, here's the scenario I'm just talking about. We saw the previous scenario. Let me go back, right? It breaks through, comes back down, holds, and shoots back up. Here's one. There's a reversal here. Nice little 5-6 points reversal. Breaks above, a little bit of a probe, so a little bit of chop, goes higher. Now the question is, when it pulls back here, is it going to hold or not going to hold? And sure enough, it breaks below and then holds for, this is a 2-minute chart, so it holds for 10 minutes, and then there's your reversal. You'll see as you get more engaged with these levels that we provide you that this is pretty common. Those of you who follow the prediction points, this doesn't have prediction points on it, but you'll see that those levels coincide or are very close. There's even some days where they're maybe a tick or two apart to help you solidify that trade. And so I can tell you right now that when one of these areas line up with the prediction point, I'm looking for a trade off of that level. immediately I'm saying, hey, I'm looking for a trade, whether it's bullish or bearish, it doesn't matter to me. I'm looking for a trade, and you can see there's the reaction off of that level. You can see the reaction off of this green level. Okay, here's one that a little bit tricky. You can see where the market opens right there, just a tick above the orange line. So because it opens above, we're bullish. And as long as we get a bullish move, we're going to see our red line, which is here. You can see that we've had some chop early in the market, so we have to be aware that it can test these levels again. And sure enough, after a couple of attempts to the upside, just shy of our green level, we get a retest back down and then shoots back up. And then a straight shot to our target. Look at that beautiful reversal. Retest our orange line for one more, and it catapults not only to break it, but then holds after a little bit of consolidation and then shoots for higher highs. And again, this is a level that you're going to get well before the market opens. So by the time an hour after the market, you already know this level exists. Okay, candle opens here, same scenario as before. You can see we open slightly above. That gives me a bullish bias. Not to say that we won't probe below here, as it does multiple times. This one took all day, but by the almost, what is that, 12:30, 1 o'clock Mountain Standard Time, we come within a tick or two, and again, that's within 1 point, our target is hit. So not every day is it going to be a quick move to the upside. So understanding how to manage your trades throughout this whole day is something that I definitely have been around the block on and can help you identify. Market opens one tick below right here. Kind of hard to see, but then probes through. Is a pretty decent push down. Then we get a nasty wick to the upside. But if you understand, without eliminating emotion, this is the bias, is a sell side bias. Understanding that that scenario right here can happen. Maybe you don't like it. Maybe you stay out of it and let it figure itself out. And then you got a couple of tests here. 1, 2, 3, these wicks below. And again, this scenario took a little bit longer. We didn't quite see our green line, and this is an example that you want to keep in mind for those of you who are going to potentially adopt this scenario. 90% of the time we'll hit it. It took some time to hit it over here. Look to secure some profit. When we talk about how much running room there is in this scenario, we're getting in at maybe 36 area to 35 area. And then it kind of topples out at around 27. I mean, I don't know anyone who wouldn't have profit secured by this point. But there are some individuals that hold it because they trust it. They've been there. They've been with me, understand that's what's going to happen. If you're sticking around and watching the market, then you play that risk. If not, 2 points, 5 points, 8 points of securing profit, guaranteed profit, and now you just let your remainders run. This scenario looked familiar. We get there, a little bit of a push through, reversal. Okay, the following Monday, open up, pull down, retest the level. It gives us a double bottom where you can see pre-market, we tested that. So the exact same thing happened. Beautiful push up. It gets through the green, a little bit of a chop, And again, same scenario. We're getting in here around 60. There's plenty of profit taking in front of 66. Maybe you get stopped out because you trail it tight. That's the life of a trader. But sure enough, we hit target within the hour. Your target's hit, doesn't mean it can't go higher. It can, we've seen that scenario, but here's our reversal and a reversal again for those of you sticking around watching the market. Otherwise, you're done here at 70. Maybe you take, for example, a 4 contract trade. You get in, take some profit, maybe at 4 points because in front of the green. So you got 4 points here. I'd typically take half my size off. So if I'm trading 4, I'll take 2 off here. Then I'll see about getting higher. Maybe you question yourself a little bit whether we're actually going to hit target or come up short. So maybe you take some more right here, and then you let the one runner get to your target. If it doesn't get to your target, then move your stop to your 4 points. Maybe you get stopped out on one of these 2 waves to the downside, and you end up with 4 contracts at 4 points for the day. Is that bad? I don't know. To each their own. But if you let that one runner run and just, this is a scenario where after a couple of years, I finally got comfortable with it, and I would literally just set my target a couple of ticks in front of the red line, and I'd walk away. I'd go to work. Come back, and the market either took me out on my trailing stop or it hit my target. Either way, I'm in the green. Okay, scenario where the market opens here, immediately shoots down, makes it look like we might hit target pretty quickly. Bouncing back and forth. We're still well below the orange line. Target's hit. Sure enough, there's our reversal. Reversal good for roughly 10 points. So it's being patient, understanding that these are highly reactive levels. And again, when you add that to whatever tool you guys are already using, whether you're following Justin's RVI, great tool, great trading system, imagine adding this in there so that you can maximize those trades. Okay, here's another one. Opens up what pretty high above. The question is, will it hit our target? We get some push to the upside. I don't know about you guys, but if there's a push up off of here and we're getting a test of orange line, you can see there's a lot of concern that can happen here. The question is this going to hold? Great question. But we open below, so our bias stays below. You can see that it gives us kind of a head fake where it pushes above, but then comes down, then our confirmation hold here, and then shoots down. So this one takes all day. If you're patiently waiting for an entry, there's different ways we can get in using moving averages, using VWAP, divergence, that you could take some profit to the downside here. Maybe not the most profitable day because you weren't able to stick around for more than an hour or so, but still, if you play the statistics, you can see our target does get hit. Unfortunately, in the afternoon, for those of you who might be a morning trader. Okay, I'm going to try to siphon through these a little quicker as we're running out of time.
Hey, John,
Yep.
I was thinking maybe to go up to the last couple of days that you have in here for April, just to show some recent examples. I know we have all of March, but there's some questions about some recent examples. I think those dates might be more familiar in people's minds too.
Absolutely. All right. April 1st, here's a scenario, target hit, reversal, then we get higher highs. Well, let's see. I guess that's my most recent one for April. Whoops. Let's go back to this slide. So, a couple questions came up. You know, during the course, I'll teach you other tools that I leverage to pinpoint my entries. Again, you might have a system that works, and that's great. I'm obviously using what I know best. So trading my proprietary levels. I'll also show you how I read price action to support the trades that I look for. Those of you who may not be familiar with me, I was teaching, coaching probably over 300 students during that time frame. Took a kind of a break over the last couple of years just to free up to own my own time, basically. But E1, E2, that's what I use to identify over and over again how to get in and out of the market. So quite simply, there's an entry scenario that I look for. It's called E1, or entry number 1, and then entry number 2. We shortened it with an acronym, just simply if I'm typing or in a live trade room scenario, I want to be able to relay that information very quickly by simply saying E1. People who know what that is know what to look for. Obviously, I do use indicators. I'll show you the indicators and settings that we use. How I read divergence, if you're not familiar with divergence. And then again, how I integrate Day Trade Like a Pro's prediction points into my trading plan. So here's a recent April 19th, just a couple of days ago. Here's what we talked about. So I logged in, we talked about, I literally just missed a sell at 69. We're looking for that 69 to hold. I said 59 will be tested. So selling 69, looking for 59, using 63 as your area to take some profit. Then I said there's also an additional shot at 54. Now keep in mind, this is a scenario where 59 is the target, and I'm now also identifying a lower area based on what price was giving us. So a couple of comments here, but if we skip here at 7:17, the market had not even opened yet here in the US. We're 13 minutes before the open, and I said take some profit here, or at least move to break even, and that's the push down that we just talked about towards 63. And the reason why is because it may retest 69, which is where the selling point was, but from here, bears are looking for 59. Globex low could be good enough, meaning right now, market hasn't opened, probably see a correction before the push down. And I mentioned that we could probe as high as 74, and that again, that's based on some other market conditions, and still be bearish. So one thing, if you noticed throughout the examples that I provided, was that we open below 69, then that's what I'm preferably that area holds, we're bearish. Doesn't mean that we can't probe through it, which we've seen a couple scenarios that happens. So identifying that 74 could be probed. And then if it does break, knowing that the market, I don't control the market is going to do what it's going to do. So if it doesn't hold and we do end up breaking, then we're going to look for a push up towards 79. But at the time, 69 is holding. 68 to 71 became chop. 71 actually held, and that's why at 8:02 Mountain Standard Time, I said, look, we never saw 74, so we're still bearish. 59 is the target. 64, 63 is still take some profit. 61 Globex could give us a bounce. Didn't say it was going to go, so you got to be prepared for a little bit of a bounce, and then we'll take some work for 54 still on the table. But if you're going to hold for 54, you need to take profit at 59. 54 got hit, we're done. And then I made a comment about joining us tonight. Later in the day, I'm still watching the market, happens to give us a sell signal at 64. 59 was the original target, so that's your profit taking. If you have contract size, take some more profit at 55, hold for 50. We actually ended up breaking 50 even for a little bit lower. 35 is on the table. We didn't get to 35 quite yet. So that was my comments in the Discord chat room. Here's how that particular day played out. So there's your 71 chop. We get a sell signal here, pushes down. A little bit later, there's the 64 signal that we see again. Because we broke through here, there's the reversal. We come down, we take some profit again in front of that. And then again here at this level where it held, because my target's already done here. So anything below that in a downside trend is going to be bonus. And then these pink lines happen to be prediction points. And you can see we end up getting it to 50. After some consolidation, you can see how the red line holds, and then we retest for lower lows the rest of the morning. Okay, so offering an in-depth course to learn this system. It's a 4-week course. It starts May 3rd. There's going to be 4 one-hour sessions, interactive training, show you everything that you need to know as far as this system goes. What indicators I use, how I use those indicators, how to understand each price level, what's likely to expect, what to look out for as we approach these individuals' price levels, and then you'll see it in live action. We'll also have a trade room where I'll point these out in live time.
And just a comment on that too, John. I think, we've done other courses like this before, and those live interactive trading sessions have been some of the best feedback that we've gotten, because you're actually taking the concepts learned during the training sessions, and then you are in a real world example, live market example, walking through exactly how you're applying those principles. And I think that's proven to be pretty beneficial for people taking our courses in the past.
Yep. And just a little more background on me. I ran a trade room basically from 2010 to 2018. Like I said, took a recess, caught up with Ephraim, talked about what was going on in the community here at Day Trade Like a Pro. I was impressed, and it just made sense. I think I could enhance and help a lot of people with my experience and being able to identify and point out live market conditions so that you guys can still have time to react and learn what to look for rather than being retroactive. Okay, so if you want to sign up, the course is $497, and you can sign up from that link there. If you have any questions on that, you can also contact support at Day Trade Like a Pro.
And we'll be sending around a full recording of this. We have a kind of a detailed syllabus that goes through what all the topics are each week, what John's going to be covering each week, and obviously the dates and times for each of the classes. But Mondays will be the training session going through principles, and Wednesday mornings will be the actual live trading sessions. And as part of that, John will be communicating to everyone in the course these specific levels, and you'll get access to these levels every day as part of that as well, so that you can start getting familiar with it, practice with it, and engage with him for training around incorporating this into a trading system for yourself.
There are a couple of questions about if they will learn how to calculate the levels or if they'll have access to that. after the course?
Yeah, so access to the levels will be available. It's very similar to prediction points. It is a proprietary level that I have come up with, so that will stay proprietary. We're working on a few things. Again, I'm joining Day Trader Like a Pro, so there's talks on how to release those, and I'll probably defer to David to kind of
Yeah,
talk a little bit more of that.
yeah, so the methodology in calculating, just like prediction points, it is proprietary, and I don't envision that we'll ever communicate that algorithm out. However, in line with prediction points, where we will probably most likely incorporate some automation to generating these levels, and anyone in the course at a minimum will have access to the levels for 2 months, and we're working on what it's going to look like thereafter. But there'll probably be some subscription like prediction points or the bundle package or something like that. But the key is, the key thing around the course is teaching you the system, teaching you the levels, teaching you how to trade the levels to incorporate that into your system, and so that you can use that to become profitable in a short order.
And I would say, John, also to add into this, you're not like yes, you have a very, I would say, simplistic approach to how you look at and view the market. But I mean, on a typical trade for you, what's the typical risk on a trade for you on the S&P?
So it's my typical stop loss is usually about 2 points, and some people might think that's large, but I'm looking at the big picture. So
Yeah.
when I walk into the morning and I see my target is roughly 17 points away, it's a no-brainer. I'll trade you 2 points for 17 every day of the week.
And you can take a number of cracks at it and still have it make lots of sense. I mean, you could lose 5 times and win the 6th time and you're still up 7 points. And that's like if you got stopped out 5 times in a row, which is unlikely. So I think the other thing that, I mean, part of also what you're going to be talking about is, I mean, you're going to be talking about managing risk. What do you do in certain kinds of scenarios? Finding those places of where to enter, but then how do you find places with that low risk? And outside of the methodology that you have of how you're forecasting targets, the principles that you'll teach in the course really apply. Someone could take the same principles and apply it to whatever they were trading, whether they use the method that you teach, or they use prediction points, or they use Fibonacci, or whatever they're using, their own way that they come up with levels. So they can take the principles are universal and also work on any market, not just on the S&P.
Correct.
Yeah.
And John, which markets are you planning to have the levels for while during the course? I know your focus and your expertise is the ES. I know you spent some time on gold too, but what's your thoughts on that?
Yeah, so I've tested it on the NQ, gold, and crude oil. So I know that those are the ones I'll be adding it to as well.
Okay.
Does that answer the
so
question?
ES, NQ, gold, and crude. Yep.
Crude, yep. Okay. So CL and GC.
Yep. And as you and I have talked about this, there are some nuances across the markets that you can get into during the course as well.
Yep. So for those of you who trade whatever market you guys want to trade, I'll definitely be able to get you up to speed on the nuances of it. GC is something I've kind of gravitated toward lately. When gold's setting up for a big move, it's typically showing based on those levels, and we can take advantage of it. But there are days when gold doesn't do a whole lot as well. So it's a market like that, and crude oil is kind of hit and miss. NQ, you've just got to be patient. There's a big movements on the NQ, so you got to be able to identify where the most likelihood to get in without having too much risk, right? But it all works out the same if once you understand the principles behind it. I do see a question that says bias line. I came in late. Yeah, if the market opens above, the bias is long. If the market opens below, the bias is short. It's a very simplistic method. It sounds almost dumb when you hear it like that, but the stats speak for themselves, and it's helped me tremendously as far as, especially early on in my trading career, the emotions that come with it and second guessing just get eliminated. And then there's certain things, you know, if A happens, then B is going to likely happen. Those scenarios, if you take the next step, we'll make sure that you understand those so that you understand the full picture of what's happening.
All right. Well, I think there's, we're kind of at the end of time, so I want to wrap up. For anyone who has questions, other questions, if they didn't get answered, you can reach out to either support@daytradelikeapro.com. You can send myself a message on Discord. I'm DB on Discord, or send John a message on Discord as well. He's Kuba, and we can make sure that you get all your questions answered. And then as well, we will send out a recording of this as soon as it's available with details of the syllabus and how to sign up, and the syllabus will have a few more details on the course as well. So with that, John, I really want to say thank you for your time. I want to, being so gracious with walking us through this and sharing your levels and your thought process. I know that people that were here and really paying attention and the commitment to get something out of it, like Ephraim said, I'm sure they did. I know I did, and I want to thank you for that. And then the last thing I want to say is for anyone who is here with the trial of the Ninja Trade webinar, this is the last of the 4-part training series that we were offering. And we thank you for trying us out. We hope that we are able to add value to you and support you in your trading evolution and taking the next step as a trader. And we really appreciate the time and commitment that you gave to us. We hope that you continue to stay around with us. I know I've had conversations with a lot of you, and I know that you have identified value and you will be sticking around, and we're grateful for that. And for others who it wasn't a fit, thank you for your time and thank you for your commitment, and we appreciate that as well. So with that, John or Ephraim, if you have anything else you want to say, or we can wrap it up.
Yeah, no, really, just any questions, guys. I'm here to help you the best way that I can. That's the big reason why I joined. Ephraim spoke very highly of this community. I just want to be able to provide my value to it. So reach out to me on Discord. Happy to answer any questions.
Okay, great. Well, with that, we'll call it a wrap. Thanks, John. Thanks, everyone. And look out for an email from us and reach out on Discord if you have any questions.
Thanks, guys.